So basically, your protection of the dollar is one of your greatest concerns.
I think that's important, and the more we have used sanctions, the more countries look for ways to engage in financial transactions that don't involve the dollar.
So Janet Yellen knows the danger of weaponizing the dollar. In the latest hearing with Congress, she once again admitted the obvious. When you try to sanction countries, the more they will look for alternatives. The blowbacks can be devastating. Less demand for dollar assets and the setting up of new financial systems. Ultimately, this doesn't benefit the US economy at all. The obsession in China is getting worse. The US should be competing using free market principles and not trying to bend countries to their will using punishments. You would think that the Biden White House understands this, but nope. Jake Sullivan, he's escalating the economic war. He has taken the baton from Janet Yellen and is about to strike China even harder. Sullivan, who's the NSA advisor, wants to target banks in China. The argument centers around dual-use goods again. Russia's industrial base isn't collapsing and they are placing the blame on Chinese trade. And this is crazy. You can expect to see additional sanctions measures as we watch this picture continue to evolve in the coming weeks. So something big is being prepared. A nasty surprise could be coming for Chinese banks. Back in May, the US Treasury sanctioned nearly 60 companies including Chinese firms, companies selling propellers, engines, and sensors to Russia. Classic dual-use goods, but where do you draw the line? Chips or electronics can be used in both the military and the civilian economy. The G7 has a list of dual-purpose goods. It covers almost all of China's trade with Russia. Semiconductors, electronics, machinery, rare earths, and thermostats amongst others. And these are inputs that can be used in refrigerators and cars, not just battle tanks. Every country in the world needs them for their industries. Banks are almost always involved in trade. They give financing, they collect payments, and they clear all the transactions. It's mainly the small Chinese banks facilitating trade with Russia. But Chinese giants like ICBC is a RMB clearing bank in Russia. They help process payments to and from Russia in the Chinese currency. So they could get targeted as well. Sullivan could definitely find justifications to hit Chinese banks, big or small. What the US wants to do is to choke away Chinese trade with Russia, to isolate the Russian economy from China's factories. The Atlantic Council, which is US funded, came up with a piece on Russia-China trade, and they concluded China is involved in indirect trade of dual-use goods to Russia. As we have said many times before, there are also loopholes to sanctions. Chinese traders and companies will find ways and means to maintain trade with the country. Since the start of the conflict, Chinese exports to Central Asia and Belarus have been increasing fast, from $70 million to over $250 million in exports from China. The US believes some of this is being re-exported towards Russia, and trying to track each shipment down will be virtually impossible. You can't really expect Yellen to investigate every single transaction, so the next best option is to sanction the middlemen, mainly the Chinese banks. And this, of course, is crazy. You'll break global supply chains and you'll force China into a corner. By sanctioning a Chinese bank, Sullivan is threatening to cut Beijing away from global trade. The idea is simple: cut the banks away from the US financial system and their ability to participate in the dollar trade. Even in Asia, the dollar accounts for over 70% of transactions, and this will hurt China's economy at least in the short term. But consider what this would mean for China and the world. They would be forced to develop new alternative systems of trade, and there's zero incentive to hold any US dollar assets anymore. Chinese investors just sold an incredible amount of US bonds and stocks in May. It's not just the Chinese government dumping, but funds also exiting the US markets. In one single month, they sold off $42.6 billion in treasury, agency, and corporate bonds. US equities were also dumped. And this tells us the amount of uncertainty China has with investing in the US. We are witnessing the biggest economic divorce in history. Trade between the US is getting decoupled, and the constant threats of US sanctions are freaking investors out. From January to May, China sold a total of 79.7 billion in dollar assets. Since Beijing joined the WTO in 2001, the trend has been a consistent buying of US securities like bonds. And it kind of makes sense. China would lend the US hundreds of billions of dollars to grow their economy by purchasing Chinese goods. It was a win-win proposition, and this allowed America to trade more with China. And this is called vendor financing. Since the Ukraine war, the situation has completely reversed. Over half of the sales this year were in US debt. And thanks to the uncertainty, investors are also dumping US stocks as well. So if Sullivan decides to whack Chinese banks, there'll be no incentive, zero incentive for Beijing to ever lend money to the US again. The next step could be asset confiscation like the Russians. It's important we get into the mind of Jake Sullivan. He admits that the world order is shifting, but is still trying to cling on to the existing US-centric system.
But I do think in a more sharp and distinctive way, we are moving into a new era, and that's what I talked about in my remarks, that we are, the post-Cold War era has come to a close. We're at the start of something new. We have the capacity to shape what that looks like, and at the heart of it will be many of the core principles and core institutions of the existing order, adapted for the challenges that we face today.
He wants the existing rules-based order to continue, and at the heart of this is the US dollar system. And that is the true driver of US economic and diplomatic power in the world. And that's why Sullivan's sanctions on Chinese banks are self-defeating. You are encouraging the world's biggest trading economy to ditch the reserve currency and set up competing systems. The first risk is further de-dollarization, especially with trade between Russia and China. It's no surprise that Russia's trade with China is nearly de-dollarized. Lavrov mentioned how 90% are settled bilaterally in either the ruble or the yuan. But a new milestone has been hit. We have confirmation that Russia is helping to push Chinese currency globally. This chart shows us Russia's exports invoiced in the Chinese RMB. In April, it hit an incredible $13.4 billion worth. However, exports to China were only around $10 billion worth. There's an additional $3.4 billion difference in exports to the world invoiced in the Chinese currency. It shows Putin is trying to price Russian energy exports outside of the dollar, the euro, and even the ruble. He's helping to propagate the yuan globally. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. Now you take this situation and you magnify it by 100 times. And that's how serious the de-dollarization can get if US tries to shut down Chinese banks. By cutting Beijing away from the US dollar system, what's the incentive for China to accept the currency? Sullivan might very well start a financial earthquake, but the aftershock will take down the US as well. China today has an incredible trade surplus of nearly $100 billion a month. That means in a year, China could earn $1.2 trillion in excess. And this is money in their reserves. Many of our conversations center around China using this money to buy gold and invest in the BRICS countries. But another risk for the West is China demanding payment in their own currency. China demanding payment in RMB in the yuan would see their trade surplus in dollars comes down. It also would reduce countries' need to hold USD to transact with China too. And this will boomerang back on the US Treasury market. Countries globally will have less reason to buy US bonds because trade with China will be de-dollarized even further. Another risk facing the US economy goes beyond Jake Sullivan and his threats of sanctions. There's another fundamental reason why the Chinese bid for stocks and bonds will continue to disappear. It's because the new America will be more protectionist than ever. President Biden has dropped out of the elections and Kamala Harris is on the ticket. And let's get real for a moment. Do you really think she will win the presidency?
I am Kamala Harris. My pronouns are she and her. I am a woman sitting at the table wearing a blue suit.
And I think that there are those who are unable to see what can be, but there are many more who are able to see what can be unburdened by what has been.
Look, at this point, it's a done deal for Trump. If Harris becomes president, imagine the talk between her and Putin or with President Xi in China. So it's critical we prepare for Trump presidency. There will be big economic implications, especially in trade between the US and China. Trump intends to hit China with a 60% tariff across the board. At that rate, UBS believes it would halve China's growth. Growth could drop from 5% down to 2.5%, and this would be an economic war. The financial repercussions would be very serious. A 60% tariff would mean less Chinese goods would flow into the US. And this won't be good for the US economy because inflation would undoubtedly head up. When you hit the Walmart or Costco, the price of everything will fly up. Expect the cost of groceries to jump by 20%, 30%, or even 60% or more. For China, this represents big problems as well. Bilateral trade could collapse from over $500 billion to just $100 billion, which means China could face a shortfall of $400 billion annually. And this makes it even less likely for China to depend on the US dollar for trade. If you can't get enough dollars for your imports, China will push harder for bilateral trade in local currencies. In a way, Trump's tariffs on China might end up hurting the dollar's reserve status. He wants to devalue the dollar to make US exports cheaper. He has said it many times before. But if trade with China collapses and everything goes local, fewer dollars will flow out into the global economy, and that would conversely strengthen the dollar and cause a global shortage. Another issue the trade war could have is slowing down the US economy. China exports deflation, but if you slap a ton of tariffs on them, you don't really get the benefits. The real economy doesn't benefit. According to the Tax Foundation, higher tariffs aren't good. In fact, we could see US GDP fall by nearly a full percent point. Full-time jobs could also drop by 700,000. And this is the consequence of trade barriers. You make big government even bigger and life for US consumers and companies even tougher. Going forward, China has very little choice but to decouple financially from the US. Lesser trade means fewer dollars coming in. And what's the point of buying treasury bonds when sky-high tariffs are preventing your goods from entering the US? What's the point? The bulk of China's trade is coming outside the US or Europe. Developing countries accounts for 50% of total Chinese exports. And this is very significant. Electronics, chemicals, cars, China is supplying these economies with a ton of stuff. Beijing is essentially powering their economies, and because of this, there's a lot of leverage here. Sanctioning Chinese banks and blocking them from the US dollar system will be a horrible mistake. China could simply tell their trading partners to pay for imports in the Chinese RMB, and emerging economies will do it. Affordable goods are more important than trying to protect the US dollar's hegemony. But let me know what you think. Will Sullivan really sanction Chinese banks? And how will Beijing react to this? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.